Hello, everyone, and welcome to the Distilled Spirits Council Ask the Expert webinar series. I am Ross Mulcairn, the Director of Member Services and Business Development at the Distilled Spirits Council of the United States, better known as DISCUS. For those of you who are tuning in, we are recording this webinar, so it'll be available later on the DISCUS YouTube channel and in our member portal for all of the DISCUS members here and who may have missed this live today. For those of you who are not as familiar, Discus is the leading voice and advocate for our members and the distilled spirits industry overall. Discus provides a wealth of resources and services, including this webinar series that aims to educate and to share relevant trends, ideas, resources, discussions, and opportunities. One of those opportunities that I want to make sure all Discus members aware on this call is the upcoming fly-in that we are hosting on September 24th at our offices in Washington, D.C., where our members will take meetings on Capitol Hill to discuss issues facing our industry, followed by our annual cocktail party that evening on our rooftop. If you would like to register for that cocktail party, there is a link going into the chat right now. We want to see everyone there. Please go ahead and register for the fly-in. It is going to be a wonderful time with a lot of important work getting done, and we would love to see you all there. Also, I want to make everyone aware of the fact that Discus is now a approved provider of the WSET course in sake. So for those of you who are interested in getting, nope, that's the wrong screen. So for those of you who are interested in getting a WSET certification in spirits or sake, please scan the QR code that is on your screen right now. We have offered levels 1 through 3 in spirits and levels 1 and 2 in sake. I'm going to leave this up just for a few more seconds so that anyone who is interested in scanning this QR code and signing up can. And if you are watching this later, go ahead and pause, and then you can scan this QR code and join us for all of our wonderful classes. The Discus Education Department does a wonderful job connecting everyone with WSET. Now, with all of that fun stuff taken care of, I want to welcome our speaker for today's webinar, Navigating the Cash Crunch, What Every Brand Should Know Before Seeking Capital, with Jonathan McDaniel, Director of Operations at the Acceleration Group. Welcome, Jonathan.
Hello. Thanks so much for having me, Ross.
Glad to have you here. Now, as all of our fine folks tuned in know, this series is called Ask the Expert. So why don't you go ahead and tell everyone here a little bit about what makes you an expert, what you guys are working on at TAG, and what our members and attendees can take away from today's webinar.
Absolutely. A little behind the scenes. This is the part where I do a quick little one, and you have more to say, or this is where I go?
All you.
All right. I'm an expert on being a financial partner for craft spirits brands. I'm not an expert on Teams or PowerPoint. So, fingers crossed, but I'm excited to be here and talk to everyone. So thanks for having me, Ross. So yes, as Ross mentioned, I am the Director of Operations for TAG, the Acceleration Group. We're a financial partner for craft spirits brands. Today, we're going to be talking about navigating the cash crunch, what every spirit brands should know before seeking capital. Obviously, raises, seeking capital, funding, all a big part of the industry, and we're going to get into the nitty-gritty of that today. There we go. So some of you might have had a chance to fill out our survey we sent out ahead of time. The link went out a couple of times this week. If you didn't have a chance, don't worry. We have plenty to go over. We're going to go over all the parts of that and answer any questions you may have. Real quick, as far as questions go, drop it in the chat. I've let Ross kind of take the steering wheel on that. If a question seems super urgent, he has the go ahead to interrupt and drop that question right away. Otherwise, we have some time allocated at the end of this to answer any questions that may come up then. And if I don't know the answer to a question, I will connect you with someone from our team who can answer that. So based on the information we got from that survey, just to look back at it a little bit, kind of some amalgamated answers here. 71% of the people that filled it out of your responses say you feel a cash strain or worse. So you're having, cash flow capital issues in the industry right now. About a third of you have been directly hit by distributor payment delays. We know the industry, there's plenty going on right now as far as the landscape of distribution and how that's shifting and what that has meant for brands, especially craft brands who might not have the leverage to bridge those gaps when distributors, collapse or get late on their payments or whatever it might be. But 2/3 of you have never explored factoring or PO financing. And I think a big part of that is a lack of awareness and a lack of education in the space. So we will get into it. And in fact, I've been saying the word factoring a few times. You might have no idea what that means, and that's okay. I'm teasing it out there. I promise you there will be time dedicated to explaining exactly what that is. It's a straightforward process that if it's a process you've never heard about, might sound weird at first. So I will walk you through that, no problem at all. And a majority of people who fill it out would be interested in hearing about cash capital sources outside of banks. And so that's what we're here to talk about today. Kind of like some main points. We're going to get into those options outside of traditional bank loans. When you're dealing with lenders outside of banks, we're going to go over some red flags for you to keep an eye on so you don't find yourself in a sticky situation. We'll go through the process of factoring, the definition of it, how the process works, so you can feel comfortable if it's ever something you feel like it's time for you to explore. And along with that, we'll give some advice on how to help you have your books in order. We'll talk through kind of our onboarding process. And so if you're exploring factoring through anyone who's not TAG, we can still talk through about some of the ways to make sure that your books are clean and everything's in order when you go into those discovery calls. I will spend some time telling you why TAG is the best at it, what we do and why we do it, and how we've been able to succeed. And I know that I'm sure for some of you on this call, for us ourselves, managing cash flow through distributor delays is a hot topic right now. So those are some of the things that we will get into kind of in an order here. The outline for the day real quick. We'll go over the market reality real quick. I'm sure everyone's aware of exactly where the market stands right now. We just want to hit it at the top so we're all on the same page. We'll go over your options. Yes, there are bank loans, there are equity raises, and then there's factoring. If it's a new process to you, we're going to talk about that. We're going to explain exactly what it is and how it works and how to get you ready to go into those discovery calls with a lender. And then, why we're the best at it. I'll talk you through TAG and the different components of the entire portfolio that sits within and how we work in the industry. All right, it's not like great news, but it's reality. So we can all handle it. We all know this. Things are down a little bit. Premium spirits are down even more. Across the board, a lot of brands are waiting 120 plus days for invoices for AR to close out. There are some major, kind of like obvious reasons for this. There's been a post-COVID inventory correction. We all knew that was coming. Tariffs, I'm not even sure exactly if this is all the way up to date right now because it seems to keep changing on a daily. So I'm not exactly sure where we are, but there is the potential for maybe we just cleared out whatever. Tariffs are coming and going. They're a thing that cost, so we have to pay attention to that. So everyone is feeling the cash strap. And one of the things we want to make clear, and I like to credit Robin Williams with this, even though a lot of people say Matt Damon wrote it down, but it's not your fault. It's not your fault. That's my Boston accent. But it's not any cash drops are often not because of the brand's failure, but because of the situation, the market as a whole. Speaking of specifically, a distributor collapse in real time that has affected a lot of brands. When a distributor collapses and files for bankruptcy, and your cash gets stuck with it in that interim period, well, I'm sure everyone's aware that California distribution, there was a giant void while things changed hands, and that changed everything for some of our clients specifically. Were stuck losing the retail shelf space. Pull through was still at the same cadence, but because there was no AR being closed out, there was no money coming in, so production could not keep up. So those shelves stayed empty. And if you lose the spot in that cycle, if the cadence gets off in your production and distribution cycle, it can be a death blow. And that's one thing we want to work on helping you avoid, especially smaller producers, craft producers with zero leverage, without any larger portfolio to fall back on, or without any weight to move around and leverage. You just have to wait. As I think it's at this point we're at 180, 210 days on some of these invoices that we're waiting to get out. Everything's frozen, no cash in. Your production has to stop, but the demand has not stopped. So when you go looking for money, if you have to find money in one of these, there are three tranches, kind of, ways forward that are the typical. And to be honest, I'm sure two of these are traditional, and then we're going to add factoring, and we're going to try to normalize factoring as a process in this industry that people feel comfortable with. Obviously, there's bank financing, traditional lending, but the hurdle here is banks are not built for the three-tier system. They are not built for this industry. They don't understand it. They don't trust it. I think we're all very aware. One might call it a prohibition era mentality from the banks around the industry. Also, even if the banks are comfortable with the spirits industry, they often need 2 or more years of financial history, and smaller upstart brands, startup brands, don't have that. So the bank can be a tough way to go. So then you look at equity raise. Sure, go out, raise some more money, the capital growth. But in that way, the hurdles there are, first of all, you are selling equity, you're losing ownership, you're losing portion of control, and also the time and bandwidth that it takes to go out and charm people out of their money is time you could have spent in production, figuring out where you're going to find more cardboard and figuring out where glass is going to come from, the problems that help in production that we have to get through, instead of spending your time um, around pitch tables with decks and working on investment calls. So that brings us to the third soon to be very traditional capital source within the spirits industry: invoice factoring. It's turning an outstanding invoice into immediate cash. The the advantage here is there is no equity dilution. There's no debt added. It's not a lengthy approval period. There's no historical records are required. We'll get into that, but not to the extent that a bank is looking for. And it's not a one-time set amount. So the process of factoring can scale through all the phases of growth. So to specifically get into it, now that I've been saying the word a whole bunch, we'll talk about exactly what it is. Factoring is the practice of selling an invoice to a third party in exchange for immediate cash up front. So without taking on new debt or giving up equity, the process would work like this. When you have a PO come in and you produce it, you get production through and you have that ready to ship, and a BOL is created. And when you are ready to submit the invoice, once the invoice is submitted, TAG, or any factoring company, but specifically for this scenario, TAG will purchase that from you at a 80 to 90% LTV, loan to value rate. So we would give you cash up front, 80% of what that. So if it's a $100,000 PO, we would buy that from you for $80,000. The $20,000 left over would sit in a cash reserve in an escrow account. At the end of the net terms, so if it's 30, 60, 90-day terms, when the distributor is ready to pay, the distributor pays the factoring company, would pay us, and then we would pay out any remainder from that escrow, from that cash reserve. So our fees, which we'll get into in a moment, our fees would come out of that escrow, and then you would receive back the balance. So again, no cost up front. It also doesn't affect valuation. So if you are interested in raising, this is something that can be, this is a practice that can be combined with equity raises. Because it's not new debt, the way the factoring is set up, it won't affect your valuation. So there's no new debt, no dilution. It can scale because it's per invoice. So we can scale up, and it's a quick turnaround on time. So as far as like, if you're interested in it, if you would like to,
Jonathan, I don't mean to cut you off, but just to understand something to make sure I'm understanding and everyone else here gets it. None of those are necessarily mutually exclusive. If you wanted to explore one, that you can also look into the factoring option as it relates to sort of just the short term.
Absolutely. It is the way we consider it. Factoring is a partnership that's always available. If you have bank loans, that's no problem. We'll actually discuss some of the kind of the inner workings of that. If you're looking for a raise, if you're in if you need investment but you're scaling, or if you need to bridge a gap in a tough spot, factoring is a much more in real time solution. So as POs come in and as invoices go into aging, we can work directly with that no matter what else. If it doesn't preclude other investment, it doesn't preclude bank loans at all. So it's a similar process. Did that answer that, Ross?
Yeah.
Great.
Oh, that's helpful. I just know when you talk about sort of the three avenues, it's easy to sort of think of one versus the other, and I
absolutely
want to make sure everyone always knows that everyone's keeping their options open and staying as nimble and effective as they can.
Absolutely. As far as we're concerned, we are big fans of agility, and nimble is such a good word. I like that, Ross. But yes, flexibility, agility, whatever. Look, we know this business, and I'll get into how much we know about it. We have our own portfolio of brands, so we understand the process, and we know that it takes as many avenues as you can access sometimes. So we want to make sure that, yes, thank you for bringing that up. Good point. It's not an exclusive capital source. We fit in with many different structures. So if you were to be interested in speaking to a lender in a factoring capacity, some things that you're going to want to know that are going to come in and make you look good. The ways that you're going to look good as a brand, basically just preparation signals credibility. So all of these are going to fit into that principle, which is be prepared, be honest, be clear in your communication, and be clear in your books. And just kind of to break that down, clean accounts receivable. Yeah, have your books broken down into easy tranches, 30, 60, 90 days, AR. If there are, is there's AR older than that, not a problem. The point is just to make sure that if it's tagged, we just want to know about it. We want to know what we're looking at. We want to know why. Is it a distributor that went bankrupt? Is there some other issue that we can help with potentially? Those are the kinds of things that if they try to get brushed under, it's going to create some distrust. It's going to leave room for doubt of credibility. And if we find that ourselves in our diligence process, it's going to be we're going to feel like our risk is higher. It's going to be harder to work as a partner. So just be upfront and honest and clean with your receivables. Also, the distributor network will always be vetted. So, we're underwriting the distributor really more so than we are the brand. So we want to make sure while the brand is our client and brand is our partner that we're helping through this, the distributor will be our debtor. So it's just about being clear, making sure you have clear notes on your distributors, what your history with them has been, what orders have looked like, as well as like specifically previous orders, what case volume has looked like. As far as case volume and projections, I say as a general rule, 4 quarters behind and 4 quarters forward are a great place to be. If you have that, you'll be good to go. If you can be honest and clear about the previous 4 quarters, what growth has looked like, what volume has looked like, and if you have evidence-based projections for the next 4 quarters, if you don't have 4 quarters worth, if it's smaller projections of that, I would rather see that than some hopes and dreams. I know we all plan to blow the roof off the thing in the next 2 quarters, but the evidence-based projections will help us prepare to scale with you. And then a clean lean position, not a scary thing. We just want to make sure, there will be in our process, and I'll get to this in a moment, but to set up for it, we will file a UCC and we will run a search on any previous UCCs, and that they exist. That's no problem. If you have promissories from early investors, if you have bank loans, again, non-exclusive. So if that exists, it's just about knowing about it so we can work with that. And this is just kind of a 4 ways to break down the main principle, which is preparedness, honesty, transparency, and preparedness. And in that, like once you are ready, when you come to meet with us, one of the things I love to get prepped on this, and I'd love to have people ready for it and kind of educate up, because this usually comes after the first call. We'll have a discovery call or two. We'll discuss with the brand where the needs lie, and then we'll send out our onboarding packet, which will have all of these with it. But if this is the kind of thing, if we can again normalize factoring as a source for capital and a practice in this industry, this is the thing you can be ready for. We can save our time on that. The time spent in this process is on this front end, is always in gathering the information, running diligence on the information, making sure books are clean. Because once we get set up, when we'll get to this in a moment, but once we get set up, the process is smooth and quick. So having to run down this list just real quick so I can say it out loud, have your aging report current, up to date, and clear, any purchase orders that are current, the distributor list, the entire list, and the production history and payment history. We need to see that they're paying on time, and if they're not, again, we need to be able to discuss it. Bank statements, as much as I love direct from QuickBooks links and PDFs, we need to see the actual bank statements, so have those ready. Sometimes those can get tricky to track down when the CFO is also the CEO, is also the brand manager. It can get tricky sometimes. So knowing these things ahead of time, bank statements are a good one to have ahead of time. And then depending on who the CFO and CEO are and how it breaks down, the cap table and just corporate documentation and ownership, so we can know who we're working with and how that breaks down. And then, like I said, case count, case volume, previous, current, and the forecast. Just really, again, a way to break down more and spend a couple more minutes making it clear that preparedness is key.
Now,
as far as, yep.
What I was just going to say is, and I'm definitely going to copy ahead of what you're about to say. Whether you're going into a meeting with Jonathan or anyone else in this area, this just sounds, like good, clean fun. Like this is the kind of thing that I know I'm sure a lot of people, if they're putting this together in advance of talking to you or advance of talking to anyone else, are probably going to learn something just by looking at all this stuff all in one place, all clean. And, hopefully they have it all handy so that you're ready to go. This is I'm sorry to interrupt with your spiel there, but it was really just incredible to think about what you can learn just from looking at all this yourself before you even talk to anyone externally.
Absolutely true. That's one of the things. And again, to kind of tease ahead, we're not just a financial partner. We have operational components where we can offer operational support, accounting, and fractional CFO support is one of those for us because it is a lot. And sometimes the books can start to get away from you. And so keeping that clean, or at least being able to structure it and reorganize it and get it clean again. Yeah, you're right. Not only can it show you a lot about your business and you can show you, it can give you a better chance of having those evidence-based projections and having accurate projections. It's good, clean fun. And I watch. I think in for me, part of the goal here in normalizing this as a capital source is there. I get on these calls and I have a call and we go through the onboarding process and I talk through the process and everything makes sense and then I send the diligence list that we need for our diligence team, and people go, oh, that's going to take me a week to get together. I got this, so and so's out for a while. It's all over the place. And so, frankly, yeah, you're exactly right, Ross. These are all good things to have for your own sake, to have cleaned up, ready to go. And as far as like, not even negatives, just things to clean up first. Any liens, like I said, if there are outstanding liens, cleaning those up. Out of term or unfavorable liens will be a deal breaker for us. We can't get in front of any of that. We can't work with that. So there are some kind of like stuck spots there. So that being said, liens and in good standing, we understand that. No problem. That happens. But being aware of that, just like taxes, if back taxes, tax liens, those are going to cause issues. So if you can get those cleaned up, or again, at least be ultra clear and ultra communicative about that. That's basically the same thing with distributors. If there's disputes, if there's unpaid chargebacks, that's just the kind of thing we want to be able to reconcile on the books. If we start getting into it and running diligence and realizing that the the POs and invoices don't match up with what has gone out because the prices aren't matching up because of chargebacks, because of disputes, that's going to get confusing for us. And while you might have a perfectly good example, a good explanation for that, it'll just take time to get through it. So if you can clean that up ahead of time, and those last three are the same thing: mismatched invoice records, missing bottle documentation, not having your cap table together, or undisclosed ownership. All those things just take more time in the process. And 9 times out of 10, that's not true. 10 times out of 10, when I'm talking to someone, it's because they need capital stat. We need to help immediately. There has been a crunch for whatever reason, and you've weathered it for as long as possible, and now we've got to figure something out. So this being able to move through this part quickly is such a helpful tool for the way that we can support brands, because as soon as we can get through this and we can get under a contract and get you queued up with our allotment in a tranche, we can fund. It's this part that takes time, so having this clean and ready to go is a very helpful step. Also, you're not being interviewed, you are interviewing, I used to, in a different lifetime, I was in entertainment, and that was always the advice people would give during auditions. That's why I have such a good Boston accent, by the way. They,
It
you
really
are,
was excellent.
yeah, thanks, man. Thank you. um, you are not just you are not just being interviewed. They would say this on auditions. They would say, you're not just auditioning, you are auditioning them. Do you want to work for them? Do you want to work with them? And it's the same thing here. You are, being vetted by a lender, but also realize that you have agency, and you might be in a hurry for cash. That doesn't mean that you should not give yourself the agency that you are allotted. And so some questions to think about and to ask when you go into a lender, then you want to talk to a lender: what percentage of your current portfolio is craft spirits or beverage brands? And specifically ask for references. As far as our partners go and our client list goes, most new clients come through current client references. And that's great for us. We trust our clients, we trust our partners, so it's easy to work with their references. If you are going to a lender, they might factor. Factoring is a very common practice in logistics and freight, for instance, but that does not guarantee they have any clue how the three-tier system works, what distributors are like, what the process, what the production cycle is like. So ask and be diligent and make sure you're working with a lender that understands this specific industry. Also, another question, list every fee I'll pay upfront, ongoing, and at termination. Just like I was saying, vagueness from the brand side makes me uncomfortable. It should feel the same way to you. If you are getting vague answers as to what the fees will look like, what a fee structure looks like, if the contract doesn't make sense, if um, there's plenty of times where we can have multiple conversations about a contract. You know, you take it to your legal team and you discuss, and we come back, and we're always willing to communicate. We always want to talk through that so that everyone feels very comfortable. Our contract is, um, I I would love to. I will say, since this is what we're doing today, I'm an expert in this. I am not an expert in contract legalization. So I pass that off. I will always get those questions answered by the experts on our team. We want to make sure that everyone feels comfortable with the entire contract. And if that is not the case with the lender you're talking to, that's a red flag. Ask about a UCC1 filing. Because it may come, and what assets will it cover? Is it going to be a blanket lien? Does it cover only AR? Does it cover any hard goods manufacturing? And if just be aware so that if a dispute comes up later, or if anything goes, if there are things running long, if you get to, whatever, things go into default because of a distributor, you want to be able to understand what actually the coverage is there. And then another good one to kind of just like gauge how understanding of this industry they are. What happens operationally if a distributor pays late? And 30 days is just an arbitrary number we put in here. Like I said, we have partners that are sitting on 120, 210, even more than that now, I think. And our focus is always, again, communicate through that. When that time comes, what makes my job harder and harder to help brands is when I have to track someone down and track down to find out what's happening with an invoice, why this AR has gone to 125 days. But being on top of that and coming and saying that to me, saying, this is where we are, this is running late. Great. We can always work with that. And that would be my answer to you. If you said, what happens operationally if when someone doesn't pay? Tagged, what would you do? I'd say we would discuss it. Come to us. We have a fee scheduling increase at 120 days. It's very straightforward. That is the main change. Outside of that, we want to make sure we can help. If there are other ways that we can help, just to be upfront about that and make sure that a lender understands the process and understands the industry well enough to not flip out if something comes in late. All right. Well, I've talked for long enough, and I've expected you to trust that I'm an expert. So now a little bit about TAG, specifically within the factoring practice. We factor, we can advance 70 to 90% of invoice value. That's a quick turnaround. We keep it that way. We keep things agile and fast so that we can get that money to you same day, next day when invoices come in. We have purchase order and production run financing, so PO financing. That part of it, the PO and production run financing, is something that because we have a broader scope of operational support. We have a logistics component. We have an accounting component. We have brands within our portfolio. If we are working with you on those things, and we know that we are integrated into and involved in the production process, we can fund sooner too. That's again comes down to transparency. If it's something that we're not working with on that, and it's in the production stage, that would be something that up for discussion. Again, in the PO and production financing, if we're helping operationally, that's always something we can look at as moving up the funding to where it can help best. And we do have, like I said, the operational support. We have logistics, we have accounting. I'll get into that more in a moment too. And we scale. We have current financial partners with orders that come in that are $7,000 POs and invoices and $350,000 POs. We have clients with lines of $2 million, and we have clients that hang out with lines of 50,000. So we can scale. We are flexible and agile. And as far as the portfolio around TAG, so pardon me, we have a logistics and warehousing component. We also have accounting and financial to help with fractional CFO if you needed, keeping the books clean. And that kind of brought us to our own brand ownership because we are integrated throughout the industry. We actually have these 5 brands: Bradshaw Bourbon, Game Day Vodka, St. Cloud Bourbon, Campesino Rum, and Trebini Espresso Martini RTD are all Tag Reserve Spirits brands. So that's the thing. I wasn't kidding. We are uh what was the not we're not just the president, we're also a client. Was that a member? Was that the hair club for men? Whatever. We don't just fund. We also we are brand owners. Um the A couple of different ways where how factoring can work, how moments and opportunities that it can benefit. One of those would be to scale and meet increased velocity. Best problem to have in this industry is you blow up faster than you can produce, faster than the money's coming in. If you go from 2 to 5 states because there's been a big push, or because something kicked off, because or the distributor has expanded, or you're getting into new regions. Those are all exciting opportunities. The problem with that is you get, orders that come in all at once, and you all of a sudden you owe 300 cases and you cannot afford to get those out. But if you have some invoice or some inventory that can go out and get that covered, if you have these production runs in order, the kind of spot there where you can grow, factoring can help with get that cash sooner in that growth process. On the other end of that spectrum, I guess you could say, is weathering the cash crunch when things get tight, when things go wrong. That's one way the factoring can help. And then, kind of out of the gate, if you have a new opportunity that requires immediate action, and we'll break these down a little bit for you. So, kind of like this is a case study that's showing one of our clients who's also a Discus affiliate brand. They had rapid growth. They solid growth from 2022 to 2023, and then in the 8 quarters of 2024 and then to 25, skyrocketed. There was an 88.2% growth. They've moved to the number 12 tequila brand in the country. This was a craft brand, a smaller craft brand that has now moved into almost a top 10 in the country. And if we're looking at it this way, just a different way to look at that graph, you can see the velocity increase there and the challenges that would come with that. Keeping up with production at that point, for a lot of brands, would be impossible. Kind of being able to meet that new velocity without a cash infusion is next to impossible. So with the tag's help, being able to cut those invoices, the AR, from 90 days to 1 day, the growth meant 5,554% at 44 times the velocity. Just things, and it hasn't slowed down for these guys. It's a lot of fun. We keep things anonymous for everyone's sake, but they're doing great. It's been fun to watch and fun to be a part of. On another side, like I was saying, another time you can use factoring to weather the cash crunch. We also have a brand that I'm sure plenty of people on here, or certainly within the Discus family, can relate to, are sitting on AR that is well over 100 days old because of a particular distributor's collapse. And so because of that, all that revenue is frozen. Nothing's moving. Like I was saying before, the product is shipped. It's cleared the shelf. Pull through is done, and they couldn't get new product out until Tag was able to come in, and as those new orders were coming in, they can meet those payments up front. They can keep payroll going. They can keep production going when new orders are coming in, instead of having to wait and fall apart without the ability to pay another 60, 90 days, because your capital flow halts, your obligations don't. So that is one way we can help keep up as well. And then turning opportunity into immediate action. So this has been exciting for us. I've been on the kind of portfolio, the brand operation side for a minute too, doing a lot of work, because we've been having a lot of fun as a team. One of our brands landed a major university sports sponsorship, which is awesome and very exciting, and also means that we have a lot of new responsibilities and expectations and what we want to do based on orders that are just coming in to fill the kicking off the football season and then going into the semester and the other collegiate sports programs. All those orders we've just gotten production sent, so we're just getting to the distributor, which would normally be another 90 days before we're getting paid for that. But we have things like signage and activations and programming, and those, while the while all the goods and product has been delivered and is at the distributor, we're now sitting in that AR window. So Tag factored those. And we get that cash straight up right away. Again, love to keep this reminder out there: no debt added, no equity diluted, just cash in hand. And that way, we were able to spend the money to get, all the fun things, to get tents made for activations, to get a bajillion koozies and a bajillion pairs of sunglasses and all the fun things and posters and buckets and all the things you got to pay for to make sure that everyone knows about this great opportunity your brand now has.
And
This,
just,
yep.
Jonathan, to be clear, because I know we're talking about a lot of dollars and cents, do you guys offer terms in the bajillions, or is that just for koozies, or is that usually
uh,
just a different process?
we are very scalable. So we scale with you. So if you have needs in the bajillions, I will go ahead and say we will find ways to support your needs, and that we can handle your needs in the bajillions.
Okay.
Um,
Thank you. I just, if you're putting out that many koozies, I'm excited about all of our brands, really growing those case numbers as well.
well, at the tiered pricing, a bajillion koozies really comes out to the unit price is pretty low. It's pretty impressive. So we try
Okay.
to, buy bulk.
Sorry
So just
for getting you off the
no, no,
speed.
no. Keep me honest. I don't want to say we're doing things in the bajillions. I don't want to be quoted on that and then find out that it's the thousands and have to walk it back. So I appreciate that, Ross. Thanks for keeping me honest. Um, but in this, I think you can probably see the kind of the trend here. If those uh, POs had been delivered and invoiced, and we're sitting around waiting for that money to come in, we would miss half of football season. And football fans drink, so we need to be there for football season. It's again just cash in hand is the opportunity. So again, we have brands. So the Tag difference, we don't just fund brands; we partner with them. We partner operationally, but also even if we're just a financial partner, we understand this industry. So that's kind of like my pitch to you as far as like why I'd love to talk to you if you're looking for a source for capital. Is we speak this language, we understand the industry, we understand the systems, we understand the cycle. We can scale with you. It's not a one level payment, one price payment. We are able to grow potentially into the bajillions with you. And we are very transparent. So I'm realizing I'm saying that, and I never put a slide in here about our rates. I'll tell you straight up, our rates are a daily rate. We don't deal with interest windows. We don't deal. It's just a daily rate. There's it's between 10 and 12 basis points a day. So that's a basis point is 0.01%. So it's zero point 0.1 to 0.12% a day of whatever the funded price is. So if it was a $100,000 PO on 80% LTV, we gave you $80,000, we would be charging 0.1% a day on $80,000 when that again when it comes in, when the invoice is paid, minus those fees, depending on how many days it took to get there, you would be paid the remainder. It's that straightforward. No magic beans. I wasn't sure if that was not professional enough, but our CEO really liked the no magic beans, so I left that in there. So I'm glad that I hope that it works for you. All right, we're getting near the end of my speaking time here, but before we get all the way to that and get the questions to open up, just to recap, the two most traditional ways of capital source have been bank financing and equity. We would love to normalize factoring as a third resource there for solving problems in different ways. Again, not exclusives. They can all work together. We can support either of those as well. The process of factoring turns outstanding invoices into cash. We do it quickly. I guess I can't speak to everyone. I can't say that everyone's doing it in 24 to 48 hours, but we do. Um, Having clean books and honest numbers will make us or any other lender able to move fast. Again, like Ross said, probably help you move faster too, in general. And why I would love to talk to you specifically is because we are built for the craft spirits industry. We can scale with you. We can operationally support you. We understand how these books works. We understand the three tiers. We understand compliance. We understand that it's a funky industry and can be, and we love it. So that's why we're here in this and not in logistics or somewhere else. Um, oh yeah, look at that. Questions, drop them now.
Yeah.
Um,
So anyone
uh,
who's tuned in, if you have anything that you want to know, or anything that didn't make sense, I know a couple of those terms went, a little over my head, as I am just your lowly host, not quite the expert that Jonathan is here. Drop them in the chat. We have a Q&A box as well. We'd love to hear from you. We want to make sure that these webinars are as beneficial for you guys as they can be. So if anyone has anything that they want to know, please go ahead and send those in.
Please do. I
to
know I
make
can
sure
talk
that
really fast, so if I sped through anything, I can backtrack. I can clarify. I know that I spoke in some accents during that. If you couldn't understand me and need me to clarify, you can let me know that too.
Yeah, or if you have any other accents that you would like Jonathan to perform as he answers those questions, I
Take
believe he did say early on that that was something you were open to doing.
yeah, absolutely. If you ask a question, you can request an accent for the question to be answered in. That sounds risky. I don't think that we're
That's
actually going to
that's
do
a
that.
terrible idea. We do not actually. That is not actionable. Um, okay, so we got one that says, "What is the actual annualized interest rate?"
Yeah, so that's part of the transparency. It can break out. You can do the math on it, break it out. But at 0.1% a day, it would just clears at that. So it really is just 0.1% a day. Oh, okay. Um, uh, that exact basis points level would be based on diligence. There are sometimes it goes up a little higher if our risk coverage needs to be a little higher, but between 0.1 and 0.12, it's a daily clip. It's not annualized. So if you want to extrapolate out, it's a month. At the 30-day mark, it ends up being roughly 3%, but it just comes down to a daily pip.
Amazing. And I know, that obviously then depends on how long it gets paid. So,
Right.
the shorter the term, the better the result is.
Right.
But that's obviously part of the reason that everyone has is in these crunches is these windows are getting longer.
Right.
Um, and then yep, someone asked if you could, Jonathan, pull up that last slide again. I know
Hmm.
someone wants to know your email address and how to reach you. Um,
Yeah,
and wants to know if this deck can be sent out to them afterwards so they can keep
for
watching
sure.
and reading in.
For sure.
Absolutely. So
I would
this
love
will
to
be
share.
this is normally part of my spiel at the beginning, so apologies if I left it out today. This recording will be sent out to all registrants and attendees, and with Jonathan's blessing, we will include this deck in there as well, so you guys can read through it at your own pace, or you can just rewatch the recording and hear our smiling, see our smiling faces and hear Jonathan's wonderful accent work as it is added on to here. As we wait for other people to send in some questions that are coming through. I know we have other webinars coming up. I believe the 25th, we are doing a webinar with the TTB that we would love to see you all there, answer some questions that you guys have. There is a link now in the chat for that. And then our next Ask the Expert is on September 17th, using data to drive decision making with our friends at the Haskell Company. And that will be also in the chat. Wow, what great teamwork. Thank you, Evan, for dropping those in. That was great work. Um, Jonathan, I gotta be honest with you. A lot of people right now are just thanking you for this wonderful work, and they seem to be thrilled with the webinar. And I guess you just blew them away. There's not enough questions we have today. So, if anyone has any questions in the future, please reach out to us, membership at distilledspirits.org, or you can reach out directly to me, ross.mulcairn at distilledspirits.org. Jonathan's email was up on the screen. We will send that out to you as well.
I'll put
I
it.
believe.
I can make this chat, right? I'm just gonna put it here and it's
Yeah,
gonna come out.
there you go. Look at that. Make it accessible so everyone can copy and paste it into your Outlook or your Gmail or whatever service you use, and start talking to our friends at Tag, later today.
Yeah,
Um,
please do. Please reach out.
I know we've had a good luck recently with some of our webinars that someone emailed us and said they already booked a call with somebody by the time I emailed them to thank them for attending. So, we're thrilled to have you here. Um, Yeah, so I'll go ahead and let everyone go a little early today. Thank you all for being here. We look forward to seeing you all at any upcoming webinars. Jonathan, I want to thank you for your time. And is there any parting words you'd like to leave all of our friends with here today?
No, I think I left it all on the table today, but please reach out. I guess here's what I would say is preparation really is key. So not just coming in with the right stuff, but having this conversation ahead of time. Getting under contract with us doesn't obligate anyone to anything. And again, the process of getting through diligence and getting onboarded is the long part of the process. So there are no tricks. There's no smoke and mirrors. I would love to have the conversation and get through some of these early steps sooner than later, so that when something hits the fan and you got to do something quickly, the front is taken care of. I would love to have these conversations now, so that when you need help, this part's taken care of and we can get right to the help.
Love it. Everyone, every Discus member is going to have their all their papers ready and all their house completely in order because we have the best and brightest in the industry on hand. So we're Thank you, Jonathan. Thank you, everyone, for attending. Thank you, everyone who's watching this later on. And we look forward to seeing you all at the fly-in on the 24th, our September 24th, 2026 in Washington, D.C. And opening up in about a month will be registration for the 2027 Discus Conference in March of 2027 in Washington, D.C. And we look forward to seeing you all there as well. Thank you, everybody, and we will see you next time.
Thank you, everyone. Thanks, Ross.